In today's episode, we're going to be talking about the importance of post-earnings callbacks and why they're so important to get just right. So let's talk about what a post-earnings callback is, just to get everything started. You've spent all this time preparing your earnings script, you've done your earnings call. Now it's the time that you spend one-on-one with analysts from, call it 5:30 p.m. Eastern time until late in the evening, spending one-on-one time with each of the covering analysts that follows your stock. I want you to think about post-earnings callbacks like the dessert at the end of a really good meal. And you are the chef that takes a lot of care to make sure his restaurant gets a really good recommendation in the New York Times. This is something you don't want to slack on. You don't want to spend all of your attention on the earnings call only to slack on the post-earnings callback. It's just as important to get just right, and there are some really key things that you can do during a post-earnings callback that can really shape the outcome for your company and your stock in the days that follow. So how does this work? You take time to write a script. You edit that script. You practice the script. Then you even pre-record the script. You spend all this time focusing on it, and then you do your earnings call. And then sometimes there are crickets. Sometimes there's just not that many people listening to your call. But there's a reason for that. See, back in the days when I was on the sell side, and even the early days when I was on the buy side, a really good sell side analyst might only cover 8, 10, or the best would cover 12 stocks. Today, some of the highest rated analysts can cover 40 or even 50 stocks. I heard one of the best software analysts is now covering 74 stocks. So what does that mean? It means that you can bet your bottom dollar that on the day you have earnings, 10 other companies in your sector have earnings as well. And so there's a very good chance that you will do your earnings call and there will be no one from the sell side on it. Now, that's a low likelihood that no one will be on it. Maybe you'll get the backup third string quarterback, the low-level associate who's 26 or 25 years old, fresh out of MBA school, or 2 years out of college on your earnings call, asking a very basic question. Now, maybe you're Google and Snap and Microsoft and you have the number one analysts on your call, but that doesn't always happen. And even if you do, they might be hopping back and forth between earnings calls. So the post-earnings callback is your chance to go one-on-one with the covering analyst to make sure that they understand all of the key points from your earnings call and that their note the next day reflects everything that's really important. And it's less about the note itself and more about their understanding of the puts and takes about the quarter and about the guidance. And this is when you can get it really right. And to me, the agenda for this call is review the quarter, review the guidance, review your strategic priorities, and review what's on people's minds. To me, remember that you are competing for attention and time with so many other companies. You can never repeat how the quarter was, how the guidance was, what your strategic priorities were, or what your strategic priorities are, and how you're doing against those goals. You can never repeat those things too much. This is your chance to hammer them home to anyone that doesn't know. This is also your chance to clear up any misunderstandings that that particular analyst might have. Over the course of the quarter, you'll probably see their research notes, and every once in a while, they've just got something a little bit wrong. This is your chance to say, hey, by the way, I see that you're very focused on this. I have one client that has analysts that do lots of channel checks, and they are notoriously wrong. This is your chance to tell that analyst why those checks are not generally statistically significant and why if they want to keep doing them, they can, but it's sending them down the wrong path. So in summary, remember, this is like the dessert at the end of a great meal. Do your part, prepare as much for the dessert as you did for the meal so that you can send people off into the evening knowing everything that you want them to know about the quarter and the guidance and the strategic priorities of the company so there's no more misunderstandings.